The 20% down payment is a myth. Here's what you actually need to buy a home. Quick math. The house you want costs $300,000. 20% down means you need $60,000 in cash. $60,000. That number is why you're still renting. And here's what I need you to hear from a guy who approved home loans for 31 years. That number is a myth. Of all the loans that crossed my desk, the ones with 20% down were the minority, not the rule. First-time buyers routinely bought homes with 3.5% down, some with 0. Stay with me because by the end of this video, you'll know the real number. And for some of you, it's going to move your timeline up by years. If you're new here, I spent 31 years as a certified mortgage underwriter. FHA, VA, USDA, conventional. I was the person who actually said yes or no on the file. I'm retired now, I'm not a lender, and I have nothing to sell you, which means I can just tell you the truth. And the truth about down payments comes in a ladder. Let's climb it from the bottom, 0% to 3% to 3.5%. And then I'll tell you where the 20% myth came from. Because there is a real reason it exists, it's just not the reason you think. Rung 1, the zero down loans. Yes, zero down payment mortgages exist. They're not scams, they're not fine print traps, they're government-backed programs I personally underwrote for decades. Let's start with VA loans. If you served in the military, or you're the surviving spouse of someone who did, the VA loan is, in my honest professional opinion, the best mortgage in America. Zero down, no monthly mortgage insurance, competitive rates. I watched veterans buy homes with almost nothing out of pocket, year after year. If you're a veteran watching this and you're saving for a down payment because nobody told you, I'm telling you. Full video on VA loans coming soon on this channel. Now let's talk about the USDA loan. Fewer people know this one. The Department of Agriculture backs zero down loans for homes in eligible rural and semi-rural areas. And rural is more generous than you'd think. Plenty of small towns and outer suburbs qualify. There are income limits and location maps, and your lender can check both in about 5 minutes. Now, zero down doesn't mean $0, and I'll get to the real cash number in a minute. But if either of those programs fits your life, the $60,000 wall you've been staring at may not even exist. Rung 2, 3 and 3.5. Not a veteran, not in a USDA area? Here's your ladder. Conventional loans at 3% down. That's not a typo. Fannie Mae and Freddie Mac have first-time buyer programs that go as low as 3% down. On that $300,000 house, that's $9,000, not $60,000. FHA loans at 3.5% down. This is the classic first-time buyer workhorse, and it was a huge part of my desk for 3 decades. FHA is more forgiving on credit than conventional. It's designed for real people with a ding or two in their history. 3.5% on our example house, $10,500. So let's update the scoreboard. The myth said $60,000. The reality for most first-time buyers is somewhere between $9,000 and $11,000 for the down payment itself. Still real money, but a completely different mountain. And one more thing almost nobody mentions: down payment assistance programs. States, counties, and cities run programs that grant or loan you part of that down payment. Some forgivable if you stay in the home a few years. They change constantly, so the move is simply asking your lender, what down payment assistance programs am I eligible for? 6 words that have saved buyers thousands. Most people never ask. The villain of the story, PMI. So where did the 20% myth come from? One thing, mortgage insurance. Put down less than 20% on a conventional loan and you pay PMI, private mortgage insurance, a monthly fee that protects the lender, not you. FHA has its own version. An entire generation decided PMI is evil and that you should save for years to avoid it. Let me give you the underwriter's view. PMI is not evil. PMI is rent you pay for leverage. On a typical first-time buyer loan, it might run somewhere in the low hundreds a month. The exact number depends on your credit and your down payment. Here's the question that actually matters. While you spend 5 more years saving up $60,000 to avoid a payment like that, what is the house doing? Historically, home prices rise over time. The house you're waiting to afford is often getting more expensive faster than you're saving. Every one of those months you're paying rent anyway, which is 100% insurance for your landlord's mortgage, not yours. And PMI isn't forever. On conventional loans, once you've built roughly 20% equity through payments and appreciation, you can generally get it removed. It's a temporary toll, not a life sentence. I'm not telling you PMI is fun. I'm telling you that wait years to avoid PMI cost a lot of people far more than PMI ever would have. Now, the part that even the "you don't need 20% videos usually skip, the real number. It's called cash to close, and it has 3 parts. 1, the down payment. We've covered it. 2, closing costs, the fees to actually make the loan happen, appraisal, title work, lender fees, prepaid taxes, and insurance. Rule of thumb from my desk, plan for roughly 2 to 5% of the purchase price. On our $300,000 house, that's roughly $6,000 to $15,000. Sometimes sellers pay part, but never count on it. 3, reserves. Money left in your account after closing. Underwriters love reserves. A buyer who empties every account to the last dollar to close is a nervous file. A buyer with a couple of months of house payments still sitting in savings is a strong one. Beyond approval, the water heater does not care that you just closed. So the honest math for a $300,000 house with FHA, about $10,500 down, plus closing costs, minus any seller concessions, plus a cushion. Call it somewhere in the high teens to low 20s, not 60. For a lot of you, that's a 2-year goal, not a 10-year fantasy. Fair is fair. 20% down is genuinely right for some people. If you already have the cash, putting 20% down gets you no mortgage insurance, a smaller payment, and instant equity. If you need a stronger offer to compete, a bigger down payment helps. But the myth is that it's required, that anything less means you're not ready. 31 years of files say otherwise. Your homework this week, 2 questions to ask any lender, cost nothing. 1, what loan programs do I qualify for, and what's the minimum down payment for each? 2, what down payment assistance programs are available in my area? The answers will hand you your real number. I'd bet for most of you, it's a fraction of what you've been dreading. If this moved your timeline up, subscribe. 1 honest video every week from the other side of the approval desk. Next up, what loan officers won't tell you, from the guy who checked their work. I'm the underwriter. I'll see you at the closing table.